Hello, hello, hello. What a week. I'm so excited you guys all joined me to discuss NVIDIA and the future of AI. Before I get into NVIDIA and AI, you probably should know that I was just kidding. I don't know anything about NVIDIA or AI. I guess those of you that have known me for a long time know that this was not going to be about NVIDIA, and AI. This is going to be about Ocular. And I'll probably talk about Cure a little bit at the end and a little bit of Sphere. But most of this is going to be about Ocular. So it's been a very interesting week, to say the least. Just to recap from a price action perspective, the stock was, was almost $8 on Monday before Anthony's Brad Lonkar interview came out. And then it started going down, and it went down most of the day, and it closed, I think, at like 650 or something like that. I did my YouTube on Tuesday. It was 635 when I went on, or 640. I don't know. It hit like 620, and it closed that day at like 635. So my YouTube did not, as you'd expect, did not have much movement on the stock price. The YouTube was then posted on Twitter publicly. I have a locked account with under 1,200 followers. And then shortly after that happened, the stock started imploding. Again, correlation, causation, I have no idea. And it went to, I don't know, the low fives. And it's gone down every day since until today, where it's up 3% to 480. So pretty crazy. And I have a lot of things to talk about. So let's start off with just bigger picture about the stock market. Because I think a lot of people on Twitter, a lot of people are misunderstand the nuance of someone's views. So there's like 5,000 stocks in the stock market, just in America alone. I think that's the right number, something around that, thousands. And in any given stock, you can do one of three things. You can own it, you can short it, or you can do nothing with it. And if you own it, or if you're short it, your position sizes can vary dramatically, right? You could have a 10% long, you could have a 1% long, you could have a 0.1% long, okay? And in that whole spectrum, there's hundreds of different hundreds of different ways you can express your views. But almost all of the stocks in the stock market, you and I express as doing nothing with it, right? Even if you have a very active portfolio with 50 stocks or 100 stocks in it, which is odd, you would still be neutral and doing nothing with 98% of the stocks in the stock market. So the way I look at my portfolio, and the way most people look at the portfolio, you have to adjust a little bit for taxes, but it doesn't really matter whether you own something or you don't own something. It's what would you do today if you were going to start your portfolio from scratch? And for me, there's no way I would be able to own Ocular or want to buy Ocular today at any price, given what has transpired over the last week with management and with the questions that I have outstanding. Now, last time I spoke to you, I told you I had a 20% delta adjusted position, but I told you it was all in calls, in 6 calls. Well, almost all those expired worthless on Friday. So today, the only position I have left in Ocular is 0.5% of my portfolio is in September 6 calls, 6-8 call spreads, and I have some July 6 calls. So the most I can lose here is 0.5% of my portfolio. I no longer own any common in any accounts, and I don't plan on purchasing any common in any accounts. But what's important, again, I can't highlight this enough. I'm not short Ocular. I still have exposure to Ocular. So in fact, I have a more bullish view on Ocular than 98% of the stock market, or else I would sell those calls, right? I could sell them right now. I wouldn't be able to sell them for much, but I could sell them. So with that in mind, let's discuss, mostly from a very critical standpoint, where I see the issues are here and what I think ends up happening. But I also I have notes here and they're not necessarily coherent. So excuse me if I jump around. I'd like to discuss some of the feedback I got in the last week on Twitter. And I went to stock twits for the first time in a year. I don't know why I did that. Obviously, I'm not used to any of my YouTubes or any of my Twitter accounts getting any real attention outside of the 8 people that follow me. I mean, literally, there's probably like 50 people on Twitter that are active readers of Twitter that follow me. Up until a week or two ago, I didn't let anybody new in, and I made a mistake, I think, opening up my Twitter account to people in the last 2 weeks, and I won't be doing that in the near future until things calm down. The reason for that is it's attracted what I think are some people that are intellectually dishonest, and they are gaslighting me. So they're not addressing any of the issues I'm bringing up. They're only addressing me as a person. So I'm a retail shareholder. I'm a generalist. I've heard from multiple people that all the selling last week was retail. I even heard from someone that says the company has said that it's retail selling that happened last week. This is a gigantic red flag when people start blaming market makers, retail, generalists, all gaslighting. Okay. This thing is traded like, I don't know, 20 million shares left since Monday. And there's only like 70 something million outstanding. And of those, 30% or 25% of them with 2 funds. So it's complete bullshit to think that you have your finger on the pulse of who is the one that's selling. And I don't believe in market efficiencies in any way, but if the issues I brought up weren't concerned by other holders, then this is not that big of a company, and you would see people step up and buying, right? For every buyer, there's a seller. It's just what the price is going to be cleared at. So for all the 15 million shares that traded last week, or 20 million, there were 20 million shares that were purchased. They just were purchased at much lower prices than they were, the week earlier. So it's also very disingenuous that the company, by the way, they never got back to me, of course. They never responded to my email. They never tried to contact me. It's my understanding that the vast majority of people that tried to contact them last week and this week have gotten no responses. I do know of 2 instances where an email was replied to on Monday that is not material enough to share. Then it wasn't to me either, so I'm not going to share it. And then I know of another instance where somebody spoke to the company. But I know of many more instances where people with institutional email accounts did not get replies to any of the issues that I've brought up here and I'll bring up again. So you take it for what it's worth, okay? But I do find it very interesting that they call me a broadcaster and they call me a journalist or media. There are 2 very large, very perma bulls on OCUL on Twitter. One has 30 or 35,000 Twitter followers. It's Doug. And the other one is CT. Everybody that owns OCUL knows about CT. Multi-year bull. He has 6,000 followers, I think. I have 1,200 followers. I'm confident that CT speaks to the company on a regular basis. In fact, he tweeted last week saying they'll talk to you. Just contact them. It's not true. They're selectively deciding who they're speaking to. They certainly won't speak to me. And Doug says he has a relationship with the CEO and the CFO, and he has 30,000 followers. So if that's not a broadcaster, how am I a broadcaster? Because I choose video as opposed to tweeting stuff all day long about the company. We both know that's bullshit. They talk to them because they like what they have to say about the company. And as soon as I brought up anything critical or questionable that I truly believe they don't have any answers for, specifically the 12-month data time frame, they chose to cut me off. And Make no mistake about it. My title here was owner. I was one of the largest individual shareholders of the company. I was not a broadcaster. I'm not a broadcaster. I'm not media. I'm not a journalist. I was an owner. And they have the right and the obligation to speak to owners, just like he did for 6 months before this. This is not Apple. This is a small company that shouldn't be deciding selectively who they're going to speak to and who they're not going to speak to. When you're talking about a substantial shareholder, it's no different if I had a family office, which I basically do, right? It's not just my money; it's my family's money. Is that institutional? You know, when do you decide this cutoff? It's all bullshit. So, what were the issues that I addressed, and what have we learned in the last week about them? The first one is the 12-month data coming so late, okay? And I've yet to hear any plausible explanation for why this has happened. So I have a little bit more info on this. So if you go back to the 7-month data, which was presented the last week of September, in that press release on September 27th, it says the data cutoff was August 24th. So it took them under 5 weeks to put that data together and present that interim data in a very robust fashion to investors and then at that conference, okay? But the 5 weeks in between August 24th and September 27th aren't important. What is important and is not disputable, period, is you cannot present 7-month data. Oh my God, this dog. Come on, Maisie, let's go. Come on. Yeah. You cannot present 7-month data if 7 months have not occurred yet, right? It's pretty logical. So we know that by August 24th, they had at least 7 months worth of data. It might have been more, by the way, because I'll explain why it's possible that wasn't even the actual cutoff for 7 months. But we know that it didn't go past August 24th. This means all you have to do is add 5 months to August 24th to get to January 24th. And that is the latest 12 months occurred for a cutoff. Jan 24th. Okay. Now, the reason why I said it could have happened earlier than that is the company in their press release used April 14th as the cutoff date. And they want you to think that they got it turned around fairly quickly from April 14th to the first week of June. It took them 6 weeks, which is totally acceptable amount of time to get data turned around. But April 14th is a made-up date. The only thing that happened between January 24th or earlier and April 14th is post 12-month data. And the trial was over. So they didn't need safety data post 12 months to report the 12-month data. There's no efficacy data whatsoever that was presented in that 12-month data presentation post 12 months. And there's no good explanation for it. In fact, I missed the first time around that they said they got the data, the company got the data a week ago. So a week ago from the call. So 2 weeks ago from today. So it wasn't that they kept it from partners. It's that they didn't even have it yet. Now, I believe that the single most important thing the company needed to do was get the 12-month data to partners so that they could sign a partnership. And how on earth can you say the first week of May that in the very near term, there should be a resolution when they knew they were still weeks away from getting the 12-month data, let alone giving the 12-month data to partners? Are we to believe that 12-month data was not important in deciding whether a company wants to spend hundreds of millions of dollars on a partnership? Well, Anthony himself says the 12-month data is incredibly important. He said it over and over again, how important that is to partners. So none of that jives. Either the very near term is hype, your definition and my definition of very near term are different. He's been mentioning the end of Q2 as a possible cutoff for finding the path ahead, because Q3 is when you need to launch a wet AMD trial. But they knew they weren't going to get this data until June. Now, let's say there's a plausible explanation why it was months late. I said 5 months late. It's at the very minimum 3 months late. At the very minimum. January 24th cutoff. End of February puts you to 5 months from when they presented the September data. And then you have all of March, all of April, and all of May. What's the explanation? This is not a lot of data. It's 20 patients for two doctor visits. It's 40 data points. That's it. Okay, 40 patient visits, and compiling the imaging data, and then compiling whether or not they need rescues or not. There's no p-value being calculated. There's nothing that makes this a complex, endpoint at 12 months versus the 7-month and 10-month interims. Okay, this isn't a pivotal trial. So I didn't get any good answers for any of that. The other thing that I noticed for the first time that's very confusing is if you pull up the 12-month data and you look not at the treatment arm, but you look at the control arm, notice that of the 5 control patients, 1 of them got no shot at the end of 12 months, and 2 of them went on a different anti-VEGF treatment. Okay, this speaks to what is said on the call, that at that visit, they were no longer part of a controlled 12-month study. They were going back to standard of care. And if the control group is deviating from what they were doing the previous 12 months, you have to start to question whether all the physician rescues were due to need or due to convenience. And there's a lot of controversy with this. On the 12-month call, Kanani, I can't pronounce his name, I'm sorry, Dr. Kanani says, and I quote, I have no idea what that alarm's for. I wish I could remember. Oh, I know what it's for. Damn it. I wanted to buy tickets for something in 10 minutes. How hilarious is that? I did a YouTube in the middle of a Ticketmaster on sale. All right, whatever. I'll figure it out later. So he wrote, yes. So what happens is, we were watching these patients in extension, but it's standard of care extension, essentially. So when a patient finishes the study, the option is, we know these patients have neovascular AMD. Should we just give a treatment now so they don't have to come back as often as they were in the clinical trial? Some of these patients, I have one patient actually, who's in the trial that moves 6 hours away and flies in and again and gets seen. So it depends on multiple things while we treat the patients once they finish the study. It's more like the paradigm we have in the real world, where we treat and extend to kind of decrease treatment burden. So that's why these patients were treated, even if they did not meet criteria for treatment, because in the extension phase is standard of care, and the study finished at month 12 in a controlled setting. But Anthony says on the Brad Lonecar call that everyone that was physician rescued had wetness return, fluid return to the eye. So I don't know which one it is, but to me, it brings a bigger problem to this data set. The problem I have with the data set is that while I do believe that the drug works, it's proven it's working through Australia and through the US, I don't know if this data set is big enough for a partner to spend $500 million going right into phase 3 without fully understanding a lot of questions that still need to be answered. For instance, how long do you wait till you redose? Do you redose at 8 months, 9 months, 10 months, 12 months? I'm not sure this answers that question with this small of a data set. Second, when you redose, do you get OTX TKI and then an anti-VEGF shot a month later? I mean, remember how this protocol was. They got TKI, they had dry eye, controlled eye, they got the OTX TKI shot, and then a month later, they got an anti-VEGF shot, okay? So it's not clear to me that if this was an actual pivotal trial and the drug gets approved, what you do with month 13 or month 12, whenever you decide you're redosing the OTX TKI. Do you do an anti-VEGF shot a month later too? Or do you not need that reload of the anti-VEGF shot? It's not clear to me. You don't know that from this study, because this study did get an anti-VEGF shot after the TKI shot. So, in my mind, there's a decent chance that a partner would want to do a larger phase 2 study first, so they can get more answers to those questions and have a better chance at a commercially successful product after they get approval for it. Which brings me to the other problem that I discussed on the last YouTube that I still do not have good answers to. And even Anthony says it, on the Lone Car interview. All three pathways have their own unique challenges. Okay, non-inferiority will cost over $300 million, and there is a risk that insurance balks at paying versus either generic anti-VEGF at the time or other anti-VEGF shots, because it's not clear, if you don't prove superiority, that it is indeed superior and deserves a premium price or even necessarily an equal price to the anti-VEGF generic that will be out. Okay. Number two, superiority wet AMD, which is probably the best route. He's thrown cold water on them being able to do that in the US. And if you don't do it in the US, I'm told it's basically a non-starter for investors, the eye investors that I've spoken to. You really can't go that route. It'll be very hard to get the drug approved in the US if you do an all-international trial. Now, can they end up coming up with a way to do it in the US? I don't get those warm and fuzzy feelings from listening to Anthony on the Lone Car call or on the 12-month call, or even on the Jeffries call a week earlier. And then finally, diabetic retinopathy, to me, seems the worst of the three outcomes, because you're probably not going to be able to launch that trial until late 2024, despite what the company's saying about as soon as Q1 2024. You're not going to have enough data from this small phase 1 trial of sham versus OTX TKI 6 months later to know, without a reasonable doubt, to risk the whole company on a phase 3 trial. You're going to need to get, I would think, at least to the 12-month data point. Further, remember, you're not comparing it against anti-VEGF. You're comparing it against a sham. And the FDA told them they have to compare it against anti-VEGF. Now, of course, anti-VEGF doesn't last for 9, 10, 11, 12 months. So that trial should work, assuming it works in diabetic retinopathy, which it should, because the anti-VEGFs work in diabetic retinopathy, just like they work in wet AMD. So the problem is there's no defined market for this drug, because no one takes the anti-VEGF in diabetic retinopathy because they don't want to come back for shots every 2 or 3 months. And it's a slower moving disease. So there's currently no real market for shots. And the company would have to then define a new market, getting people to come back every 9, 10, 11, 12 months for this new market. There's just so many risks with all this. I mean, if you're not going to even launch the trial to the end of 2024, the amount of money you need still is insane, right? If you launch it at the end of 2024 and it takes a year to enroll and you have a 12-month endpoint, you're talking 3 full years to approval from, Jan 2025. All of 25, all of 26, all of 27, you get approved at the end of 27. For a company that's burning $20 million a quarter, that the burn should slow minorly as hopefully Dextenza starts ramping. But let's not delude ourselves. If Dextenza grows 20%, it brings in like another $12 million this year. It's not needle moving. Doesn't matter. Okay. And then finally, the one that scared me the most. He did not bring up that path B would be minimally or non-dilutive. And, I can't get comfortable with any plan B that you would need that kind of money that could be minimally or non-dilutive. Further, whatever plan they were going to do, most likely plan B, maybe a partner, they would need to do this, of course, but with plan B, there was going to be a stock element to it. They were going to raise money through some form of secondary. It's just obvious. That's the minimally dilutive part of it. And, this stock was almost $8 on Monday, and now it's $4.80. So by market forces, their ability to raise money has gone down dramatically. And that throws a wrench in plan B. Now, I have said over and over again, I never thought there really was a viable plan B. And that's why I was so adamant that I thought they were going to partner. And look, I still think a partnership is the very much likely outcome here. I just have no idea what that partnership is going to look like. It could be a pretty disappointing partnership. It could be as little as $50 million upfront, and they decide to run a phase 2 trial, in 100 patients. And I don't think the market would love that very much, So I have by the way, this is just me, total conjecture. I have no idea what's happening in that very busy data room with everybody in it. But I'm just not comfortable taking that kind of risk, except for my options, given everything we know so far, how everything's transpired. There's some talk on Twitter, this came out of nowhere, that they could possibly do a royalty deal, similar to what the Baker brothers did with the Kodiak deal. I mean, this is a complete non-starter, okay? Most royalty deals are done after a drug's approved, after a drug's had a positive phase 3 trial. It's almost unheard of to do a royalty deal this early on in drug development, or else everybody would do it. Why would you think they wouldn't do a royalty deal over partnership if they could do that, right? If they could raise hundreds of millions of dollars by only giving up, 5 or 10% of revenue, wouldn't you do that versus giving away 80% of the drug to a partner for the same amount of money? So the Baker brothers owned 30% of the company when they did it. And it's the only example of it that's been done in kind of a phase 1 asset moving on to phase 2 or phase 3. So there won't be a royalty deal, not for not for OTX TKI at least. I would be so shocked. But this, this just started being floated last week. Like this was something that was an option, yet for the previous 6 months, never mentioned once by the company, and never even mentioned before on Twitter. But, that's how these things happen, I guess. People just want to come up with answers when that's not the answer. Now, what's the good news? The good news is that the company has not raised any money in the last 9 months. And I don't believe they've hit their ATM. Well, we know they haven't through quarter 1. And, the board would be absolutely crazy to get to this point, have $60 million in cash as of June 30th, and be counting on plan A, which is a partnership. So I truly believe the board does have a plan B, because they're risking the company in a sense by not doing a capital raise and making sure they have enough cash to survive if a partnership doesn't come through. It's for that reason that you have reason to be hopeful, that I have reason to be hopeful that there will be a successful conclusion to this process. I just don't understand how they can have gotten to where they are today with the words that they've chosen to use and be really far along with a partnership process. So it doesn't all add up to me. And because it doesn't all add up to me, I've chosen the neutral route for the most part, right? I don't short stocks, and I wouldn't short it. I have a call position in it that, would go up 8x the call spreads if they successfully partner and the street likes it. So I have upside if they partner, and I don't have the downside if, it all goes to shit. It's hard for me to see how it all goes to shit. I've never really witnessed anything like that before. I think the odds of some large dilutive deal is very low. Okay. I just don't understand why the narrative wasn't kept up in the last 10 days. Because mind you, it wasn't. Okay. They had all the opportunities to say it publicly. They had an opportunity to say it privately, and it was not said, not to me anyway. So that's where I'm at. I think that we're probably still, weeks away from hearing what happens. I'm willing to take your questions, and we could talk about other stuff. That's it? No questions? Okay. Well, I'm going to move on then. Let's talk about Cure. So Unicure blew up today. The market didn't like its HD data, I guess. It's very odd to me. Obviously, people, and look, I'm not going to talk science with Unicure. It's way beyond what I have the capacity to do. Huntington's and everything about this is just so complex. With wet AMD, at least I kind of understood, and I think I understand the overall paradigm of how they're treated, what they're, how it all works. But with Huntington's, it's like just a whole other ballgame. And kind of a dead horse to beat. Look, Christopher, with all due respect, you're someone like a few of the people that have been following me recently that I think are intellectually dishonest. I've seen your tweets. You and a few others who I assume have been longtime ocular bulls, refuse to address any of the actual issues. You just gaslight me. The thing I'm talking about on this call, the horse is very much alive. It's trading at $4.82. It's a free country. I'm not getting paid for this. So I understand that you don't like that your long is being talked about in a critical way. It hurts your feelings. It hurts a lot of your feelings. If you're intellectually honest, you can approach something from a critical point of view, right? I'm not spreading FUD. Okay. It's not the market makers. Okay. These are real issues that can and should be addressed, and they should be addressed by the company, and they could do it any way they want to. They could talk to a sell-sider, and there's many different ways to do this if they don't want to talk to me. But, please, I've read everything that you guys have sent me, and, I don't know what to tell you. I've been following you since BMRT days. The dead horse is that for those of you following on Twitter, we know most of those. I've enjoyed the video update. Okay, well, great. I'm just saying, I have been irked the last week by the intellectual dishonesty I've seen on Twitter. And it's bothered me. Well, thank you. I guess I misunderstood you because I've seen what you've written and others, and it's just been a lot of gaslighting against me. Not actually, one guy, which I'm hesitant to even bring up, he said my video last week reminded him of people that make YouTube videos, then go on to commit bad things. He was basically comparing me to a mass murderer, unhinged. Again, you don't have to agree with everything that I say, though all I'm doing is making objective facts, right? I'm not subjectively looking at this data and saying this drug works, this drug doesn't work, whatever. I'm literally pointing out inaccuracies of management's own words and discussing what they're saying and what they're doing, what they're not saying, what they're not doing. That's it. And if you are fine with the way management is handling this, then you're comfortable owning it. And if you're me and you're not, then you're not. Look, I'll have FOMO if this works. Obviously, it was a big position, and I'll be very upset if it works, because if it works, then it was really just very, very poor communication, and unforced errors on management. And anything, whatever you want to argue, by the way, the stock going from 780 to 480 is an atrocity for the system, for the process. Okay, they need a strong stock price to have a position of strength with partners, because they have to have a viable plan B. And part of partnering is you sell stock to the partner. So, make no mistake about it. Even if they somehow pull this off, what they did last week was really, really an unforced error. Because some guy with 1,200 Twitter followers and 26 people on his YouTube channel is surely not responsible for setting a stock from 780 to 480. Okay, it's what was said and what was not said on all those calls. And I'm sure they're doing private calls with institutions. And clearly they're not saying whatever the institution wants to hear them to say, because the stock's only going down. So, I've been doing this a long time. I welcome all feedback in all of my names. In fact, I rather hear people give me critical feedback than being in an echo chamber. And the reason why I'm so active on Twitter the last week, reading every tweet about this name, is I wanted to see what the pushback is to my pushback. And I got nowhere with it. They're going to do a royalty deal like the Baker brothers, that everyone that's selling is retail, that I'm a generalist and I just don't understand. The 12-month data thing, nobody has an answer for. Anthony always struck me as a straight shooter. Very tough to reconcile his words chosen all year and then realize 12-month data was only just shared. I can't reconcile it. He didn't just say just shared. He said they just got it a week ago. So I can't reconcile it. Okay, Cure, sorry. I more than doubled my position in Cure today. This situation is very, very odd. Well, I have said many times that people that looked at Cure as a value investment were looking at it wrong. All the cash is going to go away as they burn it, to the ground over the next few years with their pipeline. That being said, today they have over $16 a share in cash, and the stock's trading $12. And despite what everybody on Twitter says, Huntington's is not dead. And they should have some idea in the next 12 months whether or not there is a viable path to possibly getting a registration from this data. Okay, I'm not going to go into the weeds about the data. You could read about it on Twitter, but the company has tremendous value outside of Huntington's. They have built, a manufacturing capability in gene therapy over the last 15 years. That's worth many hundreds of millions of dollars. They have 3 drugs that should enter the clinic in the next 6 months. And one of those, the epilepsy drug, should have initial efficacy findings, I would think, within 12 months of it entering the clinic. So for me, I think this is massively oversold, and I doubled my position. I'm disappointed that we didn't see more, but from an efficacy standpoint, it did show trends on both low and high dose, and it even had a dose-dependent or time-dependent trend where the low dose for 24 months did better than the high dose for 12 months. And, if you trust what they said in the call, everyone's basically stable. So if you look out a year or 2 years from now, and even if you don't have the biomarker necessarily, but you have stable efficacy, stable functional endpoints, it paints a pretty compelling case that the drug works. And it doesn't require a lot of money to get to that point because all the dosing is going to be over. Just going to be monitoring them. So that's Unicure. Obviously, I'm not happy it's down 38% today. It's been a very rough week. Sphere, I'll talk about that briefly. They're doing a secondary in MSG to raise a couple $100 million. The market obviously thinks that means that Sphere is going to be even more over budget than it already is. You don't want to see it. I'm doing nothing there. I want to see it open, and I want to see it be a success. And that's where I am with Sphere. I think that's everything, guys. I wish there were more people on here with questions for Ocular, but they didn't come on, so nothing to ask me. I noticed over 11 million shares voted against the new executive incentive plans. This is for the 12-month thing. I thought that was surprising. That was a lot of votes against it. I mean, look, I was critical of last week about this, but it can't be overemphasized. Every year, management gets a new slug of options, and the stock's at or below where it was the year before. I mean, this stock's been a disaster. Not only is the stock below, when Anthony took over 5 years ago as CEO, but the value of $1 is not what it was 5 years ago. You have to adjust for that. So, it's a disaster. New incentive plan was basically for 40% more shares for management. I mean, look, it's pretty normal that this stuff happens. They always want to make sure they have enough shares to issue, and that's just biotech. But I'm always anticipating catalysts, and man, I am so looking forward to finding out what happens here. I mean, I just can't wait to see it. Look, partially because I still have a position, right? Certainly we'll know by September. So, that's where most of the call spreads are. Anything additional on BBIO? No, that's my next catalyst. I have BBIO. It's going to read out next month. That's like a 6% position. I have absolutely no idea what's going to happen there. So I put any odds on outright sale. Look, every sign has pointed to there's no chance there's going to be a sale in Ocular. Does that change now the stock's been decimated? I don't really think so. The part that people have trouble reconciling, and I do too, is that if a pharma partner is planning on putting up $300 or $400 million for the trials and giving Ocular a couple $100 million up front, why wouldn't you just buy the whole company? But you have to understand they're two very different paths. So if you buy the whole company, maybe you spend $1 billion on Ocular to acquire the whole company, and you spend another $300 million on the trial. So that's $1.3 billion you have to spend. And then you get Dextenza, which is worth a couple $100 million, and TCI, which, I don't know, as an option, it's worth $100 million maybe. And that's one path. And then the other path is you give Ocular $50 million right now. You spend $100 million or $50 million or $75 million on a phase 2 trial. And your only cost right now is $125, $150 million to see if it seriously de-risks on a phase 2 trial. Those are two very different numbers. 125, 150 versus 1.3 billion. And I think that's why you won't see a sale. partner is going to capture most of the economics. And most of these BD guys, their job is to not take excessive risk. And I think it is too risky buying the whole company at this stage. Any thoughts on the sense of the code change? I don't even know if the code change will happen. But yeah, I hope that happens. And I hope Dextenza, surges, But that's not why I own this. I didn't own it for Dextenza or for the Dextenza code change. I own this because I thought there was going to be a non-dilutive, a minimally dilutive, transformational catalyst. That's why I owned it. And you go back to my December video when I talked about OCUL for the first time. And, I am much less confident today that that's going to happen than I was in December, despite the stock being much higher. So, and I don't know how that's going to look. I should say, I think they'll do something. They have to do something. They're going to run out of cash. But I don't know what it's going to look like. And because I don't know what it's going to look like, I can't be comfortable owning it. My understanding is code change in December is not very helpful for those of us with July and September calls. That's very, very funny. That's funny. All right. Well, I wanted to do another YouTube because I really did want to address all those points and all those issues. I'm obviously not going to go on this again a week from now and say the same exact stuff. The next time you probably hear me talk about Ocular will be after there's a deal, because I don't really know what else could happen outside the company coming out with a press release or talking to a sell-sider to address these issues. They're pretty straightforward issues, right? Why does 12-month data take at least 3 months longer than it should have, given the importance of getting this out? Which one of those 3 trials are you going to run? They all have their own challenges, and some of them I think are pretty big challenges. So the sooner they can figure that out, the better. And do you stand by your minimally or non-dilutive funded till NDA? That's his words, not my words. Minimally or non-dilutive funded till NDA. He said that as recently as May 15th. You doing one if they do a massive raise? Oh yeah. I'll come on here if they do a massive raise. Those options are limited now with the stock at 475. Just to let you know how that would work. So if they were going to do a raise to raise $150 million, they would have to price it at $3.50 a share, is my guess. If they had a price at $3.50 a share, they would have to do 40 million shares. There's only 70-something million shares outstanding right now. So 40 million shares is not minimally dilutive. And that would raise 150 million. Add the 60 million they have, would be 210 million. And they are not funded till NDA in any of these outcomes. Have you seen NUVB? Oh, by the way, the other thing that I left out, my last call, Ocular has debt. It has 25 to 30 million of bank debt, and it has a convertible outstanding that is another 30 million. I'm not even counting the debt they have. So any path they take that's plan B that might require them to raise more debt in some manner, you have to count the fact they already have $60 million in debt, which I completely left out of my previous analysis. $60 million is a lot of money. No, I don't know NUVB. I don't do too much biotech. Exhibit A, look at Cure today. Why? Exhibit B, look at Ocular last week. That is the kind of thing I like. If a founder that owns 25% of it, and is incentivized with you. All right. I'm going to log off. Thank you all for joining. I appreciate it. I will see you on the internet. Bye.